Good afternoon and welcome. We are going to go ahead and get started. I would like to welcome everyone to our webinar today, Using Data to Enhance Your Buying Plan. This webinar is the first in a series of 3 webinars that we will be sharing with you all in the Buying Playbook webinar series. My name is Casey Higgs. I'm the Client Marketing Manager here at RIX, and it is my great pleasure to introduce today's hosts. We've got our own Jimmy Richburg, Director of Support, as well as Ryan Long from Potomac River Running. Welcome, gentlemen.
Thank you, Casey.
Ryan, feel free to take a second to just introduce yourself. Tell us a little bit about your background and why you're so passionate about footwear buying.
Absolutely. So I'm Ryan Long, and like Casey said, I work for Potomac River Running, and we're in the Run Specialty channel. We have 8, soon to be 9 stores in the greater DC area. In the last several years, I've spent working as the company's operation manager and footwear buyer, and my primary job is to make sure we're as efficient as possible with our inventory so we can capitalize on growth opportunities while minimizing risk. And I get a lot of joy out of diving into the data to make sure we're as successful as possible.
All right. Yeah. So we'll go ahead and dive in then. Thanks, Ryan. Ryan and I will have kind of a bit of a back and forth as we go through today, kind of talking from a high level about our topics here, and then letting Ryan add in some kind of day-to-day, real life examples of how he's thinking about and utilizing data to help plan his buying inside of their business. But data has been a pretty consistent topic in a lot of our webinars. And the reason is, we've said it on all of them. Data is really a big part of the future of retail. It's going to drive everything from how you interact with your customers to how you manage your inventory and ultimately how you plan out your buys. So if you're not utilizing data to some degree at this point, you're making a risk kind of with how you're investing your money, because data is really the key to kind of guide you in the best course of action for how you should invest your money, what products you should bring in, and to know what's going to do the best, what your customers are looking for, and ultimately help your business grow. So understanding, what data you need to be looking at and how to utilize that information is critical from a buying standpoint, and helps you really be able to make those informed decisions. So we're going to kind of talk about one, just how to even approach looking at and utilizing data when you're making these decisions, and really kind of try to dive in a little bit on how a business like Potomac is utilizing it today. So obviously there is a lot of data that you can look at, especially from the performance metric standpoint of both your suppliers and all of the products that you're carrying. So at first glance it can be a little bit intimidating trying to figure out what is the right data to look at, what does it all mean, and how can you use that information to make informed decisions. So we definitely want to make sure we touch on that and dive into it a little bit to kind of demystify the data. And as we go through, we'll kind of talk about some specific metrics that you can utilize as far as analyzing your data, what they mean, and how you can use them to make decisions, and then how you kind of overall can use data and as a part of your buying strategy and building out your buying plan. So to start out with, I think the big question is really deciding what is the right data to look at. So we'll talk about a lot of the metrics, but some of the things that we'll focus on include turnover and ROI to start with. So as a refresher, or maybe something new for most people, turnover is the amount of times you'll sell through your entire inventory over the course of a year. And ROI, or return on investment, is for every dollar that you invest in a product, how many you're getting in return. So that's the high level look. So Ryan, I'm going to turn it to you for a bit just to kind of talk about, those 2 data points in particular, and kind of how you utilize them, focus in on them, and then maybe some other data points that you may look at when you're starting in on creating your buying plan.
Yeah, thank you, Jimmy. Turn rate is a great way to measure how quickly you're selling through your inventory. A metric that you didn't mention that I find a lot of value in is GMROI. GMROI, to me, is the single most important metric to measure the health of inventory and sales. And so GMROI is essentially it's gross margin return on investment. And this value lets you see both sides of the coin, how quickly you're turning over product and how much profit you're making on each dollar. So GMROI value of over 3.5 for footwear is what you want to shoot for. If your gym ROI on a particular brand or product falls below 2, then you seriously need to evaluate why you're spending your money there. And the reason this number needs to be higher than 2 is because sales need to be able to cover rent and staffing, all the other bills that are making up your bottom line. So using these metrics, you can evaluate your supplier performance, whether it's pre-season or post. It's crucial to evaluate how each supplier is doing in your store. And the bottom line is what's most important to us. So I want to see which vendors are most profitable for us. So gross margin percentage is a great way to measure this. So the higher the number, the more profit you're making on each dollar sold. And this number could go up because you have a better discount with a certain vendor, or perhaps there was a sales incentive program you took advantage of. This also factors in discounts being applied at checkout, and that can be affected by the age of your inventory. Maybe you had too much of a shoe and needed to put it on sale to get it moving, or maybe that shoe is being sold off map and you had to price match. So we want to partner with brands that have the most profitable and are the most successful for us. So after I look at profit margin, I'll evaluate that turn rate. And our goal turn rate for footwear is right around 4. This ensures we're selling through our inventory before the bills are due on the product, but aren't selling too quickly that we're missing sales. And again, if a vendor's turning between 2 or 3, then I need to evaluate which models we're carrying from that brand, or perhaps we're carrying an extra width that we shouldn't be. Maybe if we typically stock sizes 6 to 11 for women, then we will want to trim that back to sizes 7 to 10 so we can cover the bulk sizes without having any waste. And on the flip side, if we're turning that product over at a 6, then we know it's really resonating with our customers, our staff, and we're probably missing some opportunities there and should think about adding additional colors or extending our size run of the products.
Great. Thanks, Ryan. So if I can kind of try and summarize what you said there a little bit. So really, you guys kind of have some key metrics, goals for those metrics that you try to hit, and then you use those goals to evaluate the performance of both your suppliers and your products. And then based on that information, make decisions about what you're going to purchase or what you might reduce in the coming buying season.
You got it, Jimmy. That's well said.
And you've already talked a little bit about how you, what you're looking at for those metrics in terms of being able to evaluate the performance. So when you go through and you find something that's either doing really well or something that's maybe underperforming, what is kind of the process that you guys go through to identify maybe the why behind that? Because really what we want to be able to do is kind of pull meaning out of the numbers. So, if something's doing really well, is it because, the shoe is really that good, or kind of give us an idea of what that looks like for you and your team?
Certainly. So, after that first step of evaluating the vendor, evaluating the overall business, we want to dive in more deeply and analyze a product's performance. And that'll follow a lot of the same principles as evaluating a vendor. So once we've gone through that, we want to focus on a specific model. Let's maybe take a bread and butter shoe like the New Balance 880 or 860. Those models, we want the turn a little bit higher than a 4 to ensure that we can afford those items that are necessary for our business but aren't high movers. Think about like the Zante or the 1080. These probably aren't going to churn through at the same rate, but you still need them on your shelves to satisfy all your customer base. So when I'm evaluating a certain model, I look at over a longer period. Sales can fluctuate quite a bit on a weekly basis if you're looking at the model level. And I'm just as curious about how that product performed out of the gate as I am with how that product performed at the end of its life cycle. A product that can hold its price for 12 months is one I want to invest in. For example, the New Balance 860 has a very low markdown percentage during its entire life cycle because it has limited distribution. When a shoe can be 1 month away from update and still have an average markdown of 2%, that's a true difference to our bottom line. I know I can be more aggressive with booking this product and don't need to power down inventory levels as far out from update as maybe a product that had a higher price erosion. If we're looking at new products during the sell-in season that maybe we don't have any historical data on, that's when it's crucial to find comparisons in current models and extrapolate potential sales volume from there. So a couple categories I'm really looking at are price point, target age consumer, target gender, what platform that shoe is on. Those are all things that are going to determine if that product is right for us. I know pretty accurately how many light stability shoes we're going to sell, but if we're bringing another light stability option, then those sales have to come from somewhere. And this might mean cannibalizing from another shoe in that vendor's lineup, or it could mean detracting from another option on our shoe shelf. It also stands to reason that as price increases, potential sales and suitable customers decrease. So knowing where that line is for your customer is important. For our business, I know that we see a diminishing return on the sale of a shoe after $170. So we might be better off selling more $160 shoes and less $170 options. And on the flip side, we sell $110 shoes at the same rate we sell $120 shoes. And so it only makes sense that we prefer our customer to have the $120 option presented. We're going to sell the same number of shoes, but get $10 more per sale.
And I think it's fair to say, the strategy that you guys execute against really wasn't born overnight. It was definitely developed kind of over a certain amount of time and a lot of trial and error, and what worked to ultimately help you determine what are those metric goals to know, kind of be able to reach your overall business goals, and how to implement them from a buying perspective and a staff perspective, talking about the product, and from a marketing perspective, introducing the product to the customers. So let's talk a little bit about how we're utilizing data when working with your vendors. This is kind of the great debate, especially within the run specialty space for a number of years now, in terms of how much to share with vendors and what type of information to share. So in my experience, I've always found more benefit in being open and sharing data with vendors versus not. I found that it's helped produce a much stronger and a better relationship with the vendors that I'm working with. And ultimately, if being willing to share some of that information up front usually makes them more willing to work with you, whether it be like a stock exchange or a buyback later on down the line. So Ryan, let's talk a little bit about how you guys approached going into sharing information with your vendors and how that conversation looks, because I think we don't want it to be reduced to just here's the information, what happens next, but really use that as a kind of a starting point for the conversation, especially in those sell-in meetings, to say, here's what's working, here's what's not. Let's have a real conversation about what we need to do in this upcoming.
Yeah, Jim, you make some really good points there, and you know me very well. I'm a firm believer in sharing data with our vendor partners, and we began openly sharing data several years ago. Admittedly, it was slow at first. There wasn't much precedent at the time for it, and we really wanted to tread lightly. It was a matter of, let's start with a little bit of information and see where that gets us. We've established some trust, and we can build on that. And really what we found was the more transparent we were with our vendor partners, the further it went to build trust and build a true partnership. At the end of the day, it's in our vendors' best interest for us to succeed. So sharing our inventory and sales data, it's a big part of that. And like you mentioned, it allows our sales reps to get better in tune with our business and customer base, lets them make product suggestions during preseason or even in season. It really helps them identify areas of growth on the fly, or areas where maybe a certain model or color isn't working for us, and we can make some changes. We're really confident at Potomac in the job that we do in our buying, but this allows us to have extra eyes on the data. And with 10 plus footwear vendors, it's great to have people hyper focused on a specific brand. And I found it keeps me honest and engaged with all the brands we carry, even the ones that are smaller market shares. Just yesterday, actually, I had a sales rep for one of our smaller vendors in terms of market share. He sent me an email, and after getting a weekly sales analysis report, and he said that we have this product updating soon, and I noticed it hasn't sold well for the last couple months for you guys. I'd like to swap it out for something you all know sell better. And this is for a model that was very much off my radar. I likely never would have noticed this point, but having a sales rep who was focused on it and only had that one brand to hone in on allowed us to correct that mistake and get those units out of our door and replace them with something we knew would be valuable. So we share with our vendor partners on-hand inventory, sales figures, market share numbers, so they can see where they're improving. Maybe there's a product in their line they don't have, and we can share information with them to help correct those mistakes as well.
How would you say online meetings have evolved since you started sharing data? I know feedback I've gotten from retailers in the past where they become very much, I see everything that's in the bag. I only end up ordering a handful of the items, and we don't really discuss what's working and what's not. So from the time you started sharing data until now, what have you seen change in kind of the interactions and really the focus of those meetings?
It's really calls our sales reps to step their game up, and they're no longer just bringing a big duffel bag in the room and showing you colors. There's a true conversation about what product is going to work, and if you're sharing that data along the way, there's an understanding that you're putting forth the same effort to sell their product as what they would want. And I think going into the meeting, sharing a good open to buy plan with them ahead of time is crucial. So if you say, I have X amount of dollars to spend on you all, tell me the best place to spend it. That sales rep knows ahead of time there's not going to be a battle for how many dollars I'm going to get in the door. I know Ryan's going to spend $50,000. I want to give him my best $50,000. So the next time he'll spend more. And so it's been less contentious and more of a collaborative effort.
So, we've hit some kind of key points throughout the process of, being able to focus on the data perspective of the buying strategy. So let's try and tie it all together. I think the first part is really to decide on what data you want to utilize. And throughout the conversation, we kind of recommended a few metrics such as turnover and GMROI, and kind of some of the point there or the levels that you evaluate them at to know whether a product is performing and whether it's not. So I think step one is identifying that data, deciding what your goals are based off of your previous sales history, and then utilizing that information to have open, honest conversations with your vendors to help plan for the things to come, so that you can get the best product for your business, for your customers, and creating a good experience all around. Anything you want to add, Brian?
Jimmy, I think you've hit a lot of it. If there are questions that we can touch on or answer anything that has been left unsaid, we can do that.
All right, great. The last thing I'll call out here for those who are on RICS, so we just want to provide some examples of some of the reports that can be utilized to identify some of these metrics that we talked about today. So we've got a few listed there from sales analysis and bestsellers kind of being some of the better too from a sales metric perspective, and then the stock status also from an inventory and kind of open order quantity perspective.
And Jimmy, tying this page back into the vendor sharing page, a shameless plug for RICS, but since you all have implemented the scheduling report function, sharing data with your vendors it takes zero time. Once you set up a report and schedule it to happen weekly or monthly, those reports are delivered and you don't have to think twice about it. So there really isn't much excuse to not share that data.
Awesome. Thanks, Ryan. So the way I'll kind of tie it all together is really if you're not utilizing data in a big way to impact your buying plan now, the best advice I would have is just kind of start small, pick a brand or two and start just looking at some of your numbers and looking at some of these metrics that we discussed and identify what's working and what's not, and really kind of start to slowly work through the process of using that information to make decisions. And then if you are using data regularly, it's always good to kind of reevaluate your strategy as you go into each season and see is the way that you approach analyzing your numbers and using that information to make decisions. Did it work? What worked, what didn't, and then making adjustments. So constantly fine tuning your process, ultimately allowing the numbers and the data to kind of be your guide and how you make those decisions.
Well, thank you both so much. I know that we do have a few questions as well as some time to answer them. So for those of you out there that haven't had time to type in your questions, if you have any, please go ahead and do that now in your Zoom webinar chat panel. Our first question comes from, Lisette. And Lisette asks, is GM ROI, Jim Roy, and ROI the same on the sales analysis report?
Yep, it is. So it will say ROI on the report itself, but the metric itself is looking at profitability over average inventory cost over a time period that you're evaluating. So, as Ryan was diving into that a little bit, mentioning, hey, it's looking at both how profitable you are at the supplier and the product level, and compared to how much inventory you are carrying over the specific period you're evaluating.
Awesome, thank you. Our second question comes from C. Hughes, and I believe this question is for you, Ryan. Do your vendors have open access to your data at all times, or do you send it to them incrementally?
A few of our larger partners do have access to it whenever they want through a tie-in to RICS, but the others we send to them on a weekly and monthly basis. And we share with them just that particular vendor's information. So if it's Brooks, we don't share Nike information with them and vice versa.
Awesome, that makes a lot of sense. And this next question from the same individual is for you, Ryan, as well. Do you write your own open to buy for Potomac River Running, or do you use another open to buy program?
I write my own open to buy. I think that's really where everything has to start, is having a good plan to begin with. I like to start from a 30,000 foot view. I want to get a broad understanding of what our business did during this period in the past, so we can realistically forecast what we're going to do this time next year. So if the period is December 1st through May 31st, I want to look at sales numbers during that period. I want to value our inventory on the last day of that sales period, and I want to value the inventory at average cost we paid for it, since that's a constant. So once I have a total number for the season, I'll dive down deeper, and I'll do the same for each month during the period, so I can get a good idea of what the turn rate was and whether or not we were over or under inventoried. So I can really see those peaks and valleys in the sales. And since we're valuing our inventory at the end of each sales period, it's crucial to look at the smaller chunks, because inventory can really fluctuate between the dead of winter and the peak of spring. So that can really skew your turn rate. If you're valuing your inventory at the end of May, it may not really be realistic of what you needed on hand in January or February. So once I have those projected sales, I'll break them down by vendor. And at the vendor level, I'll look at how the brand performed for the last several seasons and my confidence level in their product and their operations. And then you want to kind of build it back up from there. It's really easy to overbuy if you look at each brand individually. They'll have to add up to the sum of your initial goal. And I form a lot of my plan off of cost of goods sold, since that's a constant number. What we paid for the product doesn't change, but the amount we sell it for will change throughout the season. So at the end of the day, it's an equation of, I know how many products we're going to have on hand to start the month. I know how many we're going to sell, and I know how many we want to have on hand at the end of the month. And so just filling in that gap. So a number that I use to really evaluate that is a ratio between our beginning on hand inventory and our cost of goods sold. And that number tells me how many pairs of shoes we need to have on hand to sell one unit. The lower the number, the more efficient the inventory. So if the ratio is 2, that means that we need 2 pairs of shoes to sell one. So if we have 1,000 pair of shoes to start the month, and we sell 500, the ratio is 2. The higher the number, the less that particular vendor, the less that product is really working for us.
Awesome, Ryan. Thank you so much for answering that. We do have a few additional questions, but they're all quite specific to Rick's reports and our platform. So I believe we will follow up with those individuals afterwards. If you have any other additional questions, please feel free to contact us. And we are so grateful for you having joined us today. Ryan, thank you especially for joining us to represent Potomac River Running Store. We appreciate your insight as always.